when you realize, and I don't know how many people know this, maybe you do, Ron, but the COMEX or the LBMA, which has seen massive amounts of metal bleed off, we've been hearing rumblings lately. Well, they want to price silver and gold contracts that are traded on Shanghai in London. Well, right now, silver in Shanghai is about $2.75 or more higher than in the West. Gold's about $80 higher. Now we hear rumbling that China wants to warehouse metal held on the LBMA in China. What had happened, and what it, to me, will ultimately transition is the COMEX and the LBMA will no longer be beholden to a Western rehypothecated of almost 1,800% system. It will transition to some place like Shanghai, which is largely cash and carry.
In a recent interview with Liberty and Finance, renowned analyst Andy Schectman, CEO of Miles Franklin, asserts that the global landscape strongly suggests a bullish trajectory for silver prices. However, he notes that many market participants didn't foresee the rise of wealthy and industrialized nations like China and India, which now have a growing demand for physical silver. The record-high silver bullion imports into India in 2022, reaching over 306.6 million troy ounces, demonstrate this surge in demand, marking a significant increase compared to previous years. Andy highlights the limited sustainability of market manipulation tactics, particularly in the face of increasing demand from countries like China and India. He points out that efforts to suppress prices, especially through shorting, are becoming more unsustainable. This shift is evident in the significant outflows of metal from traditional trading hubs like LBMA and COMEX, even as the COMEX silver price setting continues. Many observers attribute this to what's commonly referred to as silver price manipulation by commercials. Meanwhile, there's growing speculation surrounding the pricing of silver and gold contracts on Shanghai exchanges, where premiums over Western exchanges are notable. The gradual transition towards a new pricing mechanism, potentially led by Eastern exchanges like Shanghai, appears inevitable. This transition represents more than just a shift in pricing. It symbolizes a reconfiguration of global power dynamics. While there may be temporary disruptions as the market adjusts, it signifies a strategic realignment of market forces that will likely reshape how commodities like silver are valued worldwide. By strategically accumulating silver and advocating for pricing mechanisms that better reflect their interests, countries like China are reshaping the global trade landscape. This shift isn't isolated to silver, but reflects broader geopolitical trends, highlighting the evolving role of emerging economies in shaping the future of global markets. We will present clips from Andy Schectman's interview with Ron's Basement, but before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
When everything in the world tells you that the price should be going higher, but what they didn't keep in mind, what they didn't, I think, factor in when they started doing this years ago, was that countries would become wealthy and industrialized like China and India, and will stand for delivery. And that's what's happening. And that's why we're seeing, guys like Bill Holter, you mentioned to me offline, who said that much silver has been drained from COMEX. It has. And 350 million in the last 2 years. And India has imported 400 million, and that we know of. And China is massively accumulating it. So when you talk about the need for silver as not just an industrial metal in green and digital applications, not just a monetary metal that has been viewed as money for 5,000 years, but as a strategic metal, unfortunately, in warfare, there is I guess you could say, a smoking gun, no pun intended, as to why these, even when in the midst of, several years of a structural deficit, that the price is doing what it's doing. And I think that has a lot to do with it, this need for silver in high-tech weaponry. Well, again, all manipulations have an end game built into them, and you can only manipulate a market for an extended period of time by pushing it in the direction that it is going. And when countries like China and India and all of these large institutions are accumulating silver, the ability to continue to suppress it through naked shorting will end very badly. And I think that will happen at some point. And who knows how far away we are from it. But certainly when you realize, and I don't know how many people know this, maybe you do, Ron, but the COMEX or the LBMA, which has seen massive amounts of metal bleed off, we've been hearing rumblings lately. Well, they want to price silver and gold contracts that are traded on Shanghai in London. Well, right now, silver in Shanghai is about $2.75 or more higher than in the West on the London Metals Exchange or the COMEX, and gold's about $80 higher. And we hear rumbling that China wants to warehouse metal held on the LBMA in China. Well, how could they do that? I'll tell you how they could do that. They own the LBMA. People don't really talk about that, but they bought the LBMA a few years ago. You see this progression. They do things slowly, methodically. Don't cut off your nose to spite your face. Drain the coffers as methodically as you can, and then bang, set it free. After the arbitrage, where $2.50 or $2.75 premium to the Western price is being offered to those sophisticated enough to be able to buy it in London or New York and deliver it in China, they ain't ever coming back. And so this is a methodical process, this little by little by little, then all at once. I say it all the time, logarithmic decay. You can use it in so many facets of the world we find ourselves in right now, and this is no different. So they're playing chess, we're playing checkers, and we will wake up at a point in time, and silver will have moonshotted, and no one will know what the hell happened. But guys like you and I, who have been talking about this forever, will have a very good idea. Is the COMEX and the LBMA will no longer be beholden to a Western rehypothecated of almost 1,800% system. It will transition to some place like Shanghai, which is largely cash and carry, a reflection of what the price should be. And right now, they're telling you it should at least be almost $3 higher than the make-believe Western price, and we all know that's even way too cheap. If they were smart, they'd crank it up even higher, but is that smart? That's cutting off your nose. Now everyone will grab and say, well, something's not right here. But if you do it just enough to incentivize these traders to arbitrage, it's really, I think, and you look at how much silver's coming off in gold and rare earths and base metals and all of this stuff coming off the exchanges, they'll continue to do this until no one is foolish enough to let it go at make-believe prices. And then they flip the switch rather. And now you see a new price setting mechanism for the rest of the world by a country and countries that have been the ones understanding it, accumulating it, and producing it for years.
Gold prices are currently rising, yet they are on track for their weakest performance in 6 weeks. This trend is unfolding as the U.S. dollar strengthens and bond yields increase in response to Federal Reserve officials countering the expectations for early interest rate cuts. As the gold prices and the value of the U.S. dollar are poised to continue rising, Andy argues that the U.S. will persist in basing its currency in real terms while continuing to print money. In the absence of buyers for U.S. Treasuries, the Federal Reserve may act as the buyer of last resort, potentially leading to monetization of debt and eventual hyperinflation. Whether interest rates are raised significantly, both roads lead to the same outcome. The trend of countries moving away from the U.S. dollar is accelerating, with the potential for it to be equal to or surpass the U.S. dollar in the future, which could result in an inflationary event and a spike in interest rates. Andy believes this would lead to a cascade effect where various assets, including stocks, bonds, real estate, and the dollar itself, could face significant challenges. In such a scenario, investors may seek refuge in alternative stores of value like gold and cryptocurrencies, further exacerbating the instability in traditional financial systems. Let's get back to the interview.
The bottom line is gold price in U.S. dollars will continue to rise for the simple reason that, the U.S. will continue to base its currency in real terms. They'll continue to print. And if no one is buying our treasuries, then you have no choice but to find the buyer of last resort. And they want us to believe that's the Cayman Islands right now, but it's probably the Federal Reserve acting as a shell company in the Cayman Islands. It's monetization of the debt. It's the road that leads to hyperinflation. And that's really what I think a lot of these countries realize, is that where we are, we can't raise rates much above 5%, or we blow up the system. If we choose the latter and we inflate, well, ultimately, it will lead to much higher interest rates. Both roads lead to the same place. And this is why I've talked a lot about, how we've incentivized a lot of this destruction around the world through weaponizing the dollar and signing executive order to go green, incentivizing these BRICS countries to find alternatives. And if indeed you do get not just UAE and Russia and Iran to say we're not taking dollars anymore, but all of OPEC and say, hey, you guys are going green. We appreciate it. We're going a different direction. And when that event happens where the world dumps dollars, which would create an inflationary event, to say the least, here, as everyone dumps dollars, that interest rate spike, which is done by the market and not by the Fed chair, enables us to find a villain and to point to they did this to us. And then we go down the road of, well, what do the banks look like? Yeah, rates go up, they're all dead. Well, okay, well, how about stocks, bonds, and real estate? Well, if rates go way up, oh yeah, they're all dead. How about the dollar? Well, it's being globally dumped. There's your Klaus Schwab moment. Everything is in essence inversely correlated to that moment. And the benefit to the US would be, if you realize you're so far down the rabbit hole, there's no way out other than to default or inflate, as Richard Russell always said. 15 years ago, he said that was their only way out. Then, yeah, you have a villain now to point to usher in a new system. But any way you look at it, when you see the most knowledgeable investors on the planet, forget about how well funded they are. The central banks know the playbook, and the fact that they're buying the amount that they are, media doesn't tell us what's really happening. You got to listen to people like you and I, and our reach only goes so far. We've added. Last week I was doing some math, and we added 47 billion in debt one day alone last week. The debt is up $3 trillion since the debt crisis ceiling, and we've added about 10 billion a day per day since October 1st, and for the next year plus, the debt ceiling is uncapped. I mean, the whole thing is just upside down. So are we in a position to push back? I don't know. I hope we are. But these are the reasons why you own gold and silver. It is not to get wealthy. It is wealth. And look at the biggest money in the world. They see something's coming. And if whether or not you want to believe it by the counterintuitive price action, just look at the actions that they are doing that speak much louder than the words and the rhetoric that's leading people off the trail.
Looking ahead, the future of silver prices seems promising as demand continues to surge from key economies such as China and India. The Silver Institute's projection of total silver demand reaching 1.2 billion ounces in 2024, the second highest on record, underscores this trend. Despite potential short-term disruptions, the evolving influence of emerging economies is poised to redefine the landscape of commodities trading in the years to come. We would love your thoughts on Andy's predictions in the comments below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.